Good evening to all of you. Welcome to today's webinar. Today we are going to look at very simple trading patterns. Continue but ஆரம்பிக்கணும். So welcome you to today's webinar. Today we are going to look at simple trading patterns both for intraday and for short term. That is, you can look it for positional trading also. You can also look at intraday trading. So the most familiar thing for intraday trading is to use pivot points. So I think it is also a good system. You can use that. But without relying on anything, if you want to do just based on simple bar charts. Simple bar charts or candlestick charts. So we are only using the bar charts or candlestick charts. We are not even using moving average. We are not using any other system. So we will just look only at the bar charts or the candlestick, whichever you want, or a line. So we are using only the charts to do an intraday trading or to do a short-term positional trading. So short-term positional trading could be based on some day bars or day candlesticks, and the short-term you can either do it on a 15 minutes or 1 hour chart. Okay, 5 minutes will be too small, but you can still afford to do that. So what are the one or two patterns that we are going to use? Okay, one is that what we are doing is very simple thing which we have already said: higher highs, higher lows, or at least a higher low. This is for a bullish trend. Okay. Similarly, for a bearish trend, lower high plus lower bottom, or at least a lower top. So any one of this, if it is satisfied, we are going for bearish. So this is one pattern. So this is one. Okay. Now we will look at the chart also. The second thing that probably we will look at is see, normally you have some pivot now bars like this going, okay, then after some time you will see market going like this, okay, it will be. So what you do is that you go up to the left hand side of the chart. Now let us say it is falling up to this level, which is equivalent to this one particular important low. That is, the present low is almost equivalent to some low which was made some bars back on the left hand side of the chart. Okay. Now look at the high from which this low was made. Look at the low and look at the previous high, okay, from where it fell to this low. Now this will become an important resistance. Okay. So now suppose if this is say 11 and this is 9 and market is also close to 9, then if it again goes to 11, so it becomes like a rectangular one. Okay. So if it again goes to 11 and then starts breaking this 11 again, then in that case you can go long with a stop loss at 9. So this is another pattern. This is another pattern where you look at the present low and just look at any other low on the left hand side of the chart which corresponds to this particular low. Then look at the high from where this low has been made. So that particular place, that high either becomes a stop loss for the existing short position or for a reversal, that is to reverse the short and then to go long. Okay. So this is one pattern. We will look at the chart. So we have identified two important patterns. Third one is that sometimes let us say the market falls like this, then on this fourth day there is a low which is below this low. Okay, there is a low which is below this low. Okay, it opens like this. There is a low below this, but the close is above the low. The close is above the previous day low. So let us say this low is 8. Okay, and the close is 9. The low is 7 in this bar. That means it has gone below the previous bar low, but the close is above the previous bar low. That means there is a chance that there could be an extended correction. So what you can do is next day you can go long on any decline, which could be probably from this bottom to whatever high it goes, that to extent of 61.8 or 76.5%, okay, of that, and keep this as a stop loss, and keep this low as a stop loss, and go on the long side, So this is one where probably you will get very close to the bottom of the, because you want to do a bottom pick, okay, or a top sell. So in that case, you identify on a daily chart such positions that comes, that in that case immediately you can go for a swing trading. So you don't need to really look at the previous two patterns. Okay, now this third pattern enables you to buy very close to the bottom. So this could occur on a hourly chart for intraday, or even in a 15 minutes chart. Then probably it can happen in a daily bar, it can happen in a weekly bar. So in daily bar and weekly bar, probably you can hold the position for a couple of days also. You can hold the position for 1-2 days and look at where you want to get out, depending on the risk reward that you are taking. Okay, 1:4, something like that. Okay. Now such things, what you have to do is we have to apply a filter. So probably you take the domain of stocks which you are doing, or indices, because you will not get these patterns too frequently in Nifty, or probably even in stocks. Sometimes it will come, sometimes it will not come. So we have to be clear that any one of these patterns which we have seen, if these things emerge, then in that case we should be looking towards going on the long side or on the short side, depending on what it is. And for that, where to buy other thing, probably you can use a pivot point formula or the Fibonacci. So first is identification of the trend. Okay. After identification of the trend, using simple pattern, where you should go long and what should be a stop loss. Where you should go long and what should be a stop loss. Okay, this is the most important one, and let us look at these three patterns with examples, illustrations in indices, stocks and commodities. Now, so first we will look at the chart itself and see where it is. One. Then of course, the another important thing is that of course in this case, we are only going to use simple methodology, but to know where exactly the bottom is getting formed, let us say, that probably can be identified with the help of technical, what we saw, the divergence in oscillator. We have explained this before in many technical classes. So the divergence in oscillator, that is either in 1 hour or daily or weekly. So just look for divergence where the price goes down, okay, the oscillator does not go down. Let us say in that case a bullish signal is likely, that is maybe the bottom is it is flashing signs of a bottom. Similarly in the on the top side, if the price is moving up, okay, but the oscillator is not climbing to new high, then in the case there is a divergence. So that will give you an indication that a big trend change is likely to come. That we can see even in Nifty right now. We feel that in even a daily chart or in a hourly chart, we see such a divergence happening. That also you will see. So this is one thing where you have to just look at this extra one in order to know that in that particular time frame, now the movement is likely to be in the upside, and apply one of the three things which we have said to do the trading. So let us look at this. Is all simple thing. Of course, another thing is moving average. We'll come to it later on. So the easiest thing is, now let us say this is the okay. In this case, we will look at the for a bigger one. Okay. Now. See now in this particular case, on the left hand side, let us move closer to this. So now this low corresponds almost to this low, right? So 1613 and this is 1624, so very close to that. So if HDFC Bank goes up, probably it will have a resistance closer to 1784. So those who are holding big long position, let us say who wants to make an exit, okay, of big long positions and then to buy again, probably 1784 can give an indication. So if there is any rally from 1664 to 1784, which is 110, 120 points, 6 to 7% rally, if it comes through, then probably closer to that level one can go for a because you see three tops being made here, 1, 2 and 3. So 1784 can really be a good resistance area. So those who are holding long, can definitely look at it and take a call there. Of course, there are other candlestick patterns now. The week is not complete. Tomorrow there is a day. But here, if you look at it, I think we are seeing a bullish candle pattern in the weekly chart, which means probably we are looking towards a slightly bigger pullback to happen as far as HDFC Bank is concerned. We are not talking about that candlestick pattern of bullish engulfing bearish. I think we will reserve it for some other class. But right now it looks as if that there seems to be some sort of a bottom based on this pattern, because one is that here before this there is a doji. There is a doji in the weekly pattern, and this is a good weekly bullish pattern. So all these things are giving signs of a possible area where the market is likely to pull back. Now, what I told you is that if there is a low which is below the previous bar low, but if the close is higher than the previous bar low, then in that case probably a bottom might have been formed. Now let's look at this. Let's look at this. Okay. Now in this case, see this week the low was 1363. Now look at the previous week. Okay, previous week was low was 1387. Now this week the low is 1363, which means 24 points, almost 2% lower than the previous week. But look at the close. The close is 1419, and the 1419 is above the previous week close, that is previous week low. So the previous week low is 1387, and this time the close is now higher than 1419. So now we are getting a confirmation that probably we are bottomed out. Okay, we are bottomed out. In this place now we have to wait and see how exactly we are going to look at this. So now this bar, okay, now next bar, of course it went higher, but the close is not, the close is almost if you say this is the close, this is 1419, this is 1427, so this is 1420, so it is almost the same, because the close is normally they give it in there. So here if it is almost that, don't take the risk. So here we are not going for any sell. Okay, now look at this bar again. Now we are able to say that in this bar we are seeing a low which is below the previous week low, right? Below the previous week low, but the close is above the previous week low as well as above the previous week close. So we are getting a very good confirmation in this particular case. In this case we are getting a very good confirmation. Okay, in this case at least the close was 1420 and this close was 1420. It's not a very strong confirmation, unlike this where the close is much better than the previous week close and previous week low. Here also it is much better. So if we get a close which is above the previous week low and above the previous week close, then in that case it becomes quite a bullish situation, and in this case we have this going up. So the HDFC Bank, we can say really truly in this particular bar any dip has to be bought, and all those buying positions we can decide. Now we are looking at the trend change. Okay, so the first indication has come, so you can buy at some important level, probably at 61.8%. Now we said no, if it goes up to this, then we can put 61.8 or some percentage of Fibonacci also for this. Now 61.8%. So 61.8%, it took support there. Okay. Now you look at this. Okay, look at this bar. Now this bar, I think it went. This is 1555, 1557. To some extent, not very clear. To some extent, it went up. Okay, but the close, if you see, is much below the previous week close. That is previous week close and previous week high. So which is a sign that probably some top is coming out. As far as HDFC Bank is concerned. Some top is coming. So here we see lot of this type of patterns in the case of HDFC Bank, which alerts you to the top and some sort of a bottom at some level or so. Okay, at some level or so we are getting it, and in this particular case it's a very clear one, okay, where it went up above this and probably closed in this case. So it's a very clear case where probably the top is being made. Here is a double, there's a top, a double top formation is happening. So in that particular case, next week it slightly moves higher from this level, you can definitely look towards exiting. So maybe at 1530, 1540, very close to the high of this range of 1557, you can make an exit, and then it falls very significantly, falls very significantly. So this, what we have shown is on the positional trading, and here the second pattern also is very clear. If you see the top and bottoms, that is, look at this. This is a week. This week. So this is a higher bottom. So we are coming to the second pattern which we said. There's a first pattern, higher tops, higher bottoms, or at least we get a higher top, higher bottom. At least we get higher bottom. That is the first one which we said, right? So let us say. So we have highlighted. One is the this that is the third one which we said. Okay, it's like a squat bar. So here we have said the higher highs and higher low or higher low. So higher low for us to look into a bullish string. Now look at this. This is a bottom which is higher than the previous bottom. So how did we get a confirmation here? So now this has moved higher. Okay. So this week is having a low. The moment this high is crossed, this high is crossed, we know this is the bottom. Okay. So this bottom and this bottom. So this bottom is higher. So the moment we get some price sustaining above 1436, we can look towards going on the long side of the market above 1436. Now the stop loss will be 1397. Then let's look at this. We go here, and here we see this. If there is a close which is, or if there is a break below this, okay, if there is a break below this, then in that case it gives a confirmation on two patterns. One is this an inside bar. Okay, we have already discussed about it. So a break below this inside bar, which is 1506, and also will confirm probably as an important lower top. Will also confirm this as an important lower top, because this could not make a top here after this. So if this cuts, then probably we will have a top here. So we can look towards exiting the position below 1506. So what we took along at 1436, we need to get out at this particular place. So this is for the positional trading. For those, probably this might have resulted in 6, 7, 8 weeks of position. Resulted in 70 rupees profit, which could be 5%, so around 2% you would have got per week. So this is the way you identify. Now we have identified two important patterns based on which we have been able to get good results. Now let us look at this, whether on a daily chart whether we are getting any. Okay, now this will go to the daily chart in HDFC Bank itself. Okay. Okay, now I told you, you go to the left hand of the chart, any this one. So probably since it has crossed below this, you can always say the stop loss. Okay, so to some extent you can go, it does not come down below this. Okay, now let's look at this probably here. Yeah, so this particular one, because this is even slightly higher. So if you look at this low, now I'm keeping this, let me see an horizontal line. So those horizontal line, you can see price, if it starts to go above this, because this is the low. Okay, this is the low, and this corresponds almost to this low. Okay, and also corresponds to almost this low. So the moment it starts to move higher, okay, above this, okay, then you get a confirmation that yes, we are looking towards a break on the upside. So now above 1662, HDFC Bank looks good for a pullback, okay, rally, and we can keep this low as a stop loss. That is 1624. So 1624 with a 1662 and it's a stop and reverse. So if it goes below 1624, also you can go short with a 1662 as a stop loss. Okay, so this is on for a positions which is carries a 2% risk. Okay, so if you want to go for an intraday, we'll go for the intraday, and probably banks, HDFC Bank or stocks are generally more choppy as far as intraday is concerned. So we should go for broad asset classes. Let us look at indices, and let us look at Nifty itself to see any other pattern emerging from this. Okay, Nifty 50 index. Okay, now okay, so look at this bar. This is a bar. This low is 599, 23,599. So this is lower than that, 23,460, and this close is 23,644, and this is also 644. So approximately same, and of course it has closed above the low of this day of 599. This means there is a likely pullback from this level. So we are identifying. So next day you go and buy either the previous day low itself. So this low, the previous day bar low, which was cut as 599. So it opened slightly higher, 822. So it came to 562. Okay, so 562 was the low, 627 was the open. It came down to 562, and this low was 599. So you could have bought somewhere this 599. Could have kept this low as a stop loss, which is 460, and probably you could have moved yourself higher, and then you could have put a trailing stop loss. You could have put a trailing stop loss at some level, which we have already indicated before. So this is a very clear case where probably you are looking at the positional trading. So we caught in the index somewhere this as a bottom, somewhere this as a bottom, and it's not easy to get such trades that frequently. But if you get such a trade, probably you should look towards going on the long side of the market or on the short side of the market. That is, the low should be below the previous day low, but the close should be above the previous day low and previous day close. Of course, if it is above the previous day low, it will previous day close means it will be above the previous day low. So it should be above the previous day close. If you get such a thing, then in that case you can look towards a pullback to come either on intraday basis or on a this one, that is daily basis, sorry, on a short term basis. Now very clear, this is so the market needs to now clear 23,426. So if it clears 23,426, it can rally to some more extent. Maybe 23,740, 750 could be one, because that's this is the high. 23,780, 90, that could be one high. And probably the best case scenario could be 23,928, because I think this is going to be a very important top. 24,226 is going to be an important top, and climbing 1,300 points is not going to be that easy. So, because this, if it claims above that, then probably we will be seeing a complete shift in the trend from bearishness to bullishness. From bearishness to bullishness, very completely possible, because if you look at the daily chart, now the 50 minutes that is coming closer to 23,845 now, 23,845. So it should not go much above the 24,000. This is 24,226. 24,226 is going to be a very, very important, I would say, as an important high. So any pullback should get contained within this. So the possibility is that it can probably push towards the 23,750 or 23,950 also. 23,950 also is possible. But from there, if the bearishness is to maintain, it has to get back to some lower level of 22,600 or 700. But if it starts to cross the 23,925 itself, I think we can call it off the bearishness and look towards going on the long side. So that will be a defining point for Nifty, getting anything about 23,925. Now, you look at the same in Nifty, let us say hourly chart or 15 minutes chart. But let's look at the hourly chart. Now, okay, now this is the hourly chart, right? So now let's say, yeah. So let us look at this chart from this perspective from here. Now, when it starts to move above this level, so that is you've got a bottom here and another bottom here. Okay, so this is a higher bottom in case if it starts to cut above 23,208. So you can just go about 23,208 with a stop loss of 23,160 with 48 points, a very manageable stop loss position. You can move yourself on the upside. Now let's look at now this particular place. Now this has come, and this is a top in case it's a lower top in case if this is cut, if this low is cut. So let's look at going on the short side here. Okay. Now, if we go on the short side, that is this particular level, okay, that is below this particular level, which is approximately this particular level, right? So then in that case, we don't need to put this as a stop loss. We can put even this as a stop loss. We can even put this as a stop loss, okay, this particular place as a stop loss. So I think it just opened probably, somewhere here, but closed exactly near the this particular high, 23,264 if you see, 256 is the close. Okay, so this also didn't go though it opened a little higher, it did not look towards taking off that place to 264. So though there was some sort of randomness here, I think we need to be careful to place the stop losses, because sometimes they work on the stop losses and take you off and then bring it back to that same level or much worse level. So that needs a fine tuning, but as a concept I am saying this is where the stop loss comes. And let's look at the here. See, this is the bottom, and now once it starts to go above this place, so above this, then in that case you have a 23,050 with a 22,989 stop loss. So you get 61 points. So for the 61 points stop loss, so that's why I'm saying that probably we should always look towards not more than 1 bar as a stop loss. So the average range for this bar it says is 100, close to, I think at this point it's around 97, but that's the average. But this particular bar is able to give us now somewhere open, and so it opened somewhere, maybe broke down first and then started to move up. So 23,050 with a stop loss below 22,989. I think that's a good area where probably you could look towards going on. You could have gone on the long side here, and probably wait. Suppose if it starts to move up from here, this particular hour, then that means again we are getting a higher bottom. Okay, so let us say this particular hour is 23,218 with a stop loss of 23,191. So anything above 218 with a stop loss of 191 you can take, and keep moving your stop losses from this low to this particular low after next hour. So this way you can go for a very short term trading call based on higher tops, higher bottoms. Okay, very simple concept, no moving average, nothing. So you are getting a very fair impression about this. And at the same time, if you get a suppose the daily chart. Now market is generally down, and suppose if it starts to break this low, let us say 23,090, then that means a new top is in place at 23,270. So you for a positional trading, anything below 23,090, it's a hit, again a bearish hit with a stop loss at 23,270. So keep an eye on 23,090 again for you to look towards going on the short side for a positional trading in the form of the futures options trading, or in the case of cash market, probably you can keep rolling out that particular position on an everyday basis till such time you are in a position to make money there. So so that you can short and then buy back on the same day, short and buy back on the same day, till such time the positional stop losses come, except for the slippage that you may encounter. So now here is a 23,090. If it starts breaking this particular low, then we will have another lower top. So in that case, now we need to see how much low it keeps going, and either in this month or in coming month. So till such time it does not break 23,090, I think we can say that probably it can push itself a little higher, maybe towards 23,750 to 770 or 23,920. Okay. So these are two things which you have seen both in terms of hourly chart as well as daily chart, the lower tops, lower bottom concept. Now, same thing if you look at it, this so now see here I told you that go to the left hand side of the chart. Now this is the low, right? So this is the low which is 24,070, and look at this low is also 24,099. So this it is below this low. It is below this low, right? So in that particular case, you need to now let's say okay, and you put this as a stop loss. So here the difference is between 24,470 and 23,099. So around 460, 470 points, which is almost 2 days of bar. Okay, so I wouldn't suggest that, but the worst come worst stop loss is this. The worst stop loss is this. So normally you keep working with 1 bar stop loss. 1 bar stop loss is a very important thing. So you should identify where we are able to get a trade to do the 1 bar stop loss. Okay, probably let us say this particular place. Now here you are able to short, okay, short the market, which is 23,938, 23,800. So 138, 140 points. So 140 points is down. Now look at this. So it has gone down to this level. Now you get a pattern. So you're not going to keep this as a stop loss once it starts to move down up to this. So you keep moving down your stop losses, and here the moment you get a pattern like this, you make an exit close to that day. So which could be 23,645. So what you shorted here at around 800, you make an exit somewhere here. Okay, and if you want, you can go long based on the patterns which we discussed. Okay, and then push it, push this. Here, no, it is a hit below this, and keep this as a stop loss. This is a spike. So anything which is around 23,391, and it just moved above this 426. So what they do is they take it slightly higher. So what you do is that if such spikes happen, don't put a stop loss immediately. So allow 15 minutes or 1 hour to trade above that particular stop loss, and then if it starts to cut again, then you go for a stop loss. Sometimes probably because of that you may suffer with a higher stop loss, but that is better. It will keep you in the market instead of getting you spiked. Okay, so those are final points which probably we'll discuss over a period of time. So right now, we are at 23,426. So normally speaking, even this particular thing should not be taken off. So 23,425, 426 should not be taken off in this move itself. So for that, you know very well already. We have done calculations before. So you can just look at what the Fibonacci could be up to 71.8. So it comes closer to 23,335. So anybody who is looking towards, now it stopped here. So if it starts to move a little higher, so 23,335. So if you are already long at this level, or if you tend to go long above 23,218, then take a profit close to 23,335. 23,335, and wait to see further signals before you go for a continuous long position on the upside. So right now it looks, if you frame up your mind, then in that case, the short-term pullback will be first towards 23,335 in case of Nifty, where from where probably there is a likely scenario where it could get shorted, and if it goes above the 23,335 and starts falling below this hourly close, which is 23,246, then a top would have been made, and probably a pullback towards much lower level can happen. So watch out for 23,335, and after it reaches 23,335, it starts breaking 23,246. Then any long position, if you have, you cut it off. Probably we may see some more fall in the market. Okay. So these are the ways you explain yourself, and again I will take off this and do it in the hourly chart. See, okay. Now Okay. See, this is one. Okay. So here, if you go on the long side, about 689, okay, here because it is there. So any short position, if you have created before, you should make an exit at 689, okay, and 689 you make an exit, and if you go on the long side 689, the stop loss will come at 562. So it's around 120 points, and if you can take that 120 points loss, you can afford to take that, and after that it has started to go down because it is stop and reverse, so you would have still got profit somewhere there. So these are basically the way that probably you could be looking towards doing this particular type of trade. And even in the case of a choppy trade, you can probably look towards this particularly the lower tops, the lower top and lower bottom formation, and the pattern which I told you. Now in the hourly pattern itself, if you see, now look at this bar. This is a hourly chart, okay, in Nifty. Now this is a doji. This is a doji, and you look at the low. This low is below this low, okay. And let us look at this close, which is say 525, 526, and this low, this close is 535. So it is above the previous bars low and close, which means there is a chance that probably we could be seeing on the upside. So the moment it starts to break this, okay, that is 559 with a stop loss at 496. So approximately you get 63 points. So it just moved up. It just moved up very clearly. Okay. So the moment it moved up very clearly, I think you got a good amount of profit, because if you apply a trading stop loss also, then in that case you will definitely made money. And there it goes up, and probably from this level to this level you can put a 78.6% Fibonacci. And here if you see, this is a lower top, because this is an important top, and below this is all these are lower lows, and here it comes, and the moment it starts to get below this, which is 645. So if you had gone long and if you had not put any other stop loss also, above 559, stop loss is 645, and below 645 you go for a short. So very clearly the lower tops, lower bottoms is the first concept that you should use. Second thing that you should use is that the pattern which I indicated to you, like a squat bar pattern, okay. And the third thing that you use is that you try to form a box from the present low to some low which is at the left hand side of the chart, and look at the top from where it has made. So that will give you an indication that if the market jumps up to that, then in that case there is a chance that it may fall from that level, and so you can either exit your positions or look towards a new long or short position depending on that. So these are very, very important patterns which will get you very closer to the bottom or closer to the top. Now we will look at the some other stocks also. Probably let's look at TCS or Reliance, or probably much more. So TCS. Now TCS, let's look at the weekly chart first, the bigger pattern. See, look at this. This chart is this is a important. See, this is a lower top, because this is the top, okay, in the weekly pattern, and after that it moved here, and this one which is 4394 with a stop loss of 4494. Okay, so this once it started to move down from that particular level, so this gave a very clear indication that yes, it is topping out. So 4394. Now again you see market going in this particular week, it has gone below again 4100. So 4100, and so the new stop loss comes at 4322. 4322. So in case if TCS takes above 4322, then in that case it is forming a lower top, okay. But at the same time it is also forming a lower bottom. So that means it is entering into a consolidation phase, which is what familiarly is called as a triangular pattern. Now TCS, okay, TCS is forming a So what's happening is that it could still move around this between 4400 to this 4100 levels for some more time. If you look at this now, the stock, it is forming a higher bottoms also. See, for example, it is forming a higher bottom. Now let us say when it took off this particular one, which is 41.99, that means this is a bottom and this is a bottom. Okay, so this you can keep this as a stop loss. So anything above 4100, anything above 4100, 4200, stop loss becomes 4011. So above 4200, 4011 on a weekly chart. Now you already shorted at 43.94, so that 43.94 should be removed at 41.99. So you would have got some profit in the short position, and this long position now you would have now entered because it is forming a higher bottom. So now right now I think the bottom formation is around 40.32 with a 41.99 as a long position. So now let us say this week has to get over. Now if you look at it, this week till today, so tomorrow we do not know what will happen, but suppose if you say today is a close day, then this is a doji pattern. Okay, and this is a low which is below the previous week low. Okay, and this close is now right now above the previous week close and bottom. So that means there is a chance that, and also this could be another lower bottom. Okay, so this could mean that above 41.91 it can pull back. Above 41.91 it can pull back towards a 44.30, 44.35. So above 41.91 it could probably pull back to 44.35. So already TCS is on the long side based on the consolidation pattern, and you want to re-enter the position. It again goes to be on the long side above 41.91, and if it goes above 41.91 you can keep 40.30 as a stop loss, 40.30 as a stop loss, and keep moving yourself on the upside. So this is on a weekly basis, where probably the stop losses will be not that much. So for those who are doing position trading, better to look at this. Okay, now quickly we will go again, we will look at all these things in coming week. For lack of time, we are looking at, say, gold. Okay, now this is a weekly pattern. Okay, now in the case of gold also, if you see, no, this was a anything which is short below this or below this means probably this is a lower top. Okay, this could come as a qualify as a lower top in this case. But again, once it starts to move above this, okay, so that means it's a basically the trend is getting reversed again. That means this is a bottom and this is a bottom. Okay, this is a bottom because this is no clear trend. So if you look at the okay, so the movement is short here, so it starts to take up above this. In that case, no, okay, this is now this confirms that probably we are at a lower higher tops compared to this. This is all too feeble. I think probably we need to know how to ignore all these things. So this is one low and this is one low. So the moment it fell below this, so there is a chance that probably we could be getting on the see, this is one. Okay, if you look at this, now the moment that's what I was telling you, the box one which you can make it now. Horizontal line, just see. So it fell below this low, right? So when it fell below this level, this itself becomes a stop loss, 26.85, or you can afford to go long about 26.85 and keep this low on a close basis 26.03 as a stop loss. Now you see this market bouncing off from 25.83, it just went here, it took support at 26.05, it went up to this particular level. Okay, there was some craziness period here around the December period, which is normally not a great like holiday season, so thin market. So but anyway, it bounced back to this level. So the close was clearly 26.22, and so we have seen the market edging up higher. So right now, this is the bottom and this is the bottom. Okay, so any fall again, if it takes off a particular week, then you should be on the long side of the market. and right now it has also gone above the 78.5%, 78.6% retracement. So which means now we can look towards buying on any dips as far as gold is concerned. Now the same thing if you apply on a daily basis. Okay, okay. Now look at this. So this low, then this low. Okay, which means we have got a very higher bottom. This is higher bottom, right? So this is an higher bottom. This is an higher bottom. So in the case of gold, if it had gone long about 26.28, and in the last 1-2 weeks, you would have been with 4 to 5% profit. So good amount of volatility as far as gold is also concerned, which is approximately an average is 29, which is more than 1%. I think something very close or slightly even better compared to Nifty. So you can afford to go literally take the gold also in your position and do the trading and realize a good amount of profit potential in trading of gold itself, which will be much more comfortable, I think. So I think if you get a good volatility like this, why not? I think you will definitely look towards doing that. So this is as far as gold is concerned. And so the Indian gold much more you can see it much more healthy because of the rupee depreciation. Here in gold the daily pattern also can be a little bit confusing. So but whereas if you look at the weekly pattern, it will be much more easier, and you look at the for monthly pattern for big investment, it will be much clear. So now gold here was an inside formation, and this, so I think probably this is going to be a very important low because it's almost going to be 3 months low. So this is going to be a very important low, and so 25, 40, 43, 44 may not be taken off that easily. So you can look towards buying gold on any dips. So this explains the way we do it, and probably any other stock also we can consider for the time being. Okay, let's look at Reliance Industries. Results have come, so I think we can be little breathe easy as far as these stocks are concerned. So this is on the monthly chart and pushed itself low. So let's look at the daily chart here in this case. Okay, now in this particular case, see, okay, now if you look at it, this went almost closer to this, right? So in this particular case, now there are two ways. One is, say this closed above the this closed above this one, right, above this. Okay, now since it closed above this high, the next low was this. It is 1269. So anything below 1269 is a place where probably you should not keep your position open. So this is 1285. And this is 1269. Okay, 1269 is this place. Anything below 1269 itself is not a very conducive thing as far as Reliance is concerned, and also that gap has been closed. So what gap came, that has also been closed. So below 1269 now it looks to be on the lower side, and it could move further lower, probably touching that same 1200 levels. Now if the same chart, if you look at it in hourly chart, let us say, see, okay, now see this. I moved myself to the left hand side of the chart, where probably we saw some good amount of rally from 1285 to 1328, which is something very similar to this. This is also 1326. So if it starts to move below the 1285, then I would definitely look towards exiting the position from the hourly chart side. So 1285, 1326, 1285, yes, but normally the hourly chart and all is a little more confusing. But those who are looking towards intraday, okay, can probably look towards that. But what's happening right now, if you see Reliance, how do you go for a short without looking at the chart on an intraday? I mean, like this basis. Now, if you are on the long side of this market, let us say this particular one, okay. So every day you keep rolling it out till such time the stop loss is taken out. So that means you keep rolling out this position, which is 1219, 1206. Then here the next important low is 1215. This important low is 1226. So you keep moving this, and probably at this place you saw one high, and then the next day was an insider day. So probably you could have moved a trading stop loss to 1285. Till such time you could have continuously kept rolling your long positions by buying and either holding the stock, or probably if you don't have that much of holding power, every day you do intraday trading on the long side. Every day you do intraday trading on the long side by buying something closer to the pivot point or S1, S2 like that. You keep buying, or buying at some important Fibonacci retracements. You can make the retracements and then work on that. So that's an alternate way of doing things. May not be that effective, but those who cannot follow an intraday chart pattern can adopt this once you guess the whole trade. So these are simple things. I think the simple the concept of trading is not difficult to understand. Okay, whether a simple pattern you can do trading. Only thing, it is psychological. So your ability to withstand losses, get out of the trade, enter the trade, that will define the success of a trader. So those who are looking at investment, that's a different cup of tea, and those who are looking at the short term trading probably can look towards daily chart or weekly chart. Those who are looking at the intraday has to adopt some new techniques like what we just discussed: higher tops, higher bottoms. Look at that and do that. Now even in this case, particularly if you look at the hourly chart, see hourly chart, now this is, so just leave this. I think the moment you have a bottom cut across this, okay, so probably let's look at this. Okay, so this is the top one which was made. So this bar, once it is cut, that is 1302, then it forms a lower tops, right? So on an hourly chart, anything below 1302 itself is a good place where probably you could have gone on the, you could have exited the position. So just based, clearly keep one item. In 2-3 things we have defined, because if one thing doesn't happen, we are looking at the alternative. The easiest thing is just look at lower tops for a short, look at lower bottoms, higher bottom for a long. That itself will give you enough money to be made. So if you have any questions now, please ask. So thanks. We'll meet again probably early next week. Thank you very much.